Hey guys, what's up? How's it going? My name is Rob and welcome back to week number 3 of the Canadian-based dividend investing case study. As you guys know, this is a dividend investing case study that I'm documenting on this channel. We do weekly updates and I show you guys how we're building up Canadian-based dividend portfolio completely from scratch. So the first thing I'm going to do is we're going to jump inside the portfolio and I'll give you guys a quick little update on how our portfolio has been performing. And if you guys enjoyed this video, be sure to subscribe to the channel and be sure to smash the like button. Really helps out. Alright guys, so the first thing we're going to be covering in today's video is going to be the portfolio update. So here's my Wealth Simple Trade account. We're going to focus on the RRSP since we're making this dividend portfolio basically inside my RRSP. We're on week number 3, so we currently have 2 stocks inside the portfolio. That's ATD, Alimentation Couche-Tard, and then CNR. And these stocks basically are both kind of sitting a little bit above 0%. So we've seen a little bit of growth since we first started investing. We'll take a peek though at the all-time return just so you guys can get an idea of what the portfolio is currently sitting at. Obviously not much has really happened. We're up about 52 cents, but you know, over the next couple weeks we'll slowly track this, but like not too much is going to happen. We're going to have to wait till we invest more stocks, we put more money in to really see that money in compound and grow. But nonetheless, here's a quick little portfolio update on our RRSP, our dividend growth portfolio. And I just want to say really quickly before we go any further in the video, if you guys want to follow along with me and build your own portfolio, there are links in the description of the video. You guys can use my link to sign up to Wealth Simple Trade, and there is a link to Blossom Social if you guys want to go on there, follow me, and see all the stocks I hold in my entire portfolios. Alright, so let's talk about the stock that I'm going to be buying inside my portfolio for this week. So I recently did a poll on Blossom Social to, once again, if you guys don't know, I'm using Blossom Social to kind of get some more feedback, and we're building this dividend investing case study really together as a community. So I did a poll asking you guys what type of sectors you might want to see, and I think it makes a lot of sense to actually focus on the financial sector. And a lot of you guys mentioned, I think finances are a pretty good sector to focus on because once again, you know, Canada, we do have some of the best dividend stocks and a lot of them are in the financial sector. So I decided to go with the bank for today's video. And I did another poll asking you guys what your top favorite bank is in Canada. And I did this basically just to see what the results would be. And I wasn't surprised actually to see that TD is a #1 voted bank stock. And at the end of the day, TD Bank is actually my favorite bank stock as well. So that's going to be the stock we're actually going to be adding inside our portfolio in today's video. So if you guys don't already know, TD Bank is one of the biggest banks in North America. And that's not only in Canada, but also in all of North America. TD Bank, or Toronto Dominion Bank, can be found on the TSX by searching up the ticker TD. And it currently trades for $86.24 Canadian on the TSX. Here's a quick little overview of how the stock has performed over the past couple years. So year to date, TD Bank is down negative 1.63%. So the stock has had a little bit of trouble over the past year or two or so. And you'll see this on this graph here. The year to date return, however, is actually looking up a little bit, a 4.57% in terms of growth. The 5-year return is 12.36% in terms of stock growth. And the max return is 3,349. So obviously this is a growth stock, a growth dividend stock that has done very well over time. You know, we've seen them take a bit of a hit during different things that happened in the economy or different, you know, events going worldwide where the whole entire market pushed down. But every single time this happened, TD kind of bounced back. And this is one of the best things about the banks. They're some of the safest stocks you can invest in Canada. At the time of doing this video, TD Bank currently has a dividend yield of about 4.45%, so it is one of the bigger dividend yield stocks inside of a portfolio. It has a well-established yield. It's not quite of a small yield, it's not quite a large yield like 6% plus, but it's right in the middle. It's 4.45, which is kind of like a nice, good, solid dividend stock. And as we always go through all of our dividend growth stocks, we want to see companies that are increasing their dividends over time. Now, TD has a little bit more of an established dividend yield, seeing about 4.5-ish% of doing this video. The payout ratio is about 48%. It's creeped up a little bit over the last little while, but that should obviously, you know, they're going through a bit of a hard time the past couple of years, so it's kind of normal to see the payout ratio rise up a bit, but as the banks basically do better over time, we should see that payout ratio go down and we should see some of those dividends increase. Nonetheless, the company has been increasing its dividends pretty solid. In 2017, we've seen a dividend increase of 9%, in 2018 11%, 2019 10%, 2021 12%, and then 2022 8%. So nonetheless, they're pretty much averaging around those double-digit dividend growth increases, and with the yield where it's currently at, which is about 4.5%, you know, double-digit dividend increases are pretty solid. So let's go inside our RRSP and let's buy some shares of TD Bank stock. So I only have $50 in today's video to invest. I know we were shooting for about $100 a week, but the reality is some weeks you guys are going to have more money than others. Some weeks you're going to have less, and that's just the way it is. There's nothing wrong with that. We can use fractional buys on Wealth Simple Trade to buy whatever stocks we want. So we can go to the top here and let's search for TD Bank. You could type in the name or we could just type in the ticker. We'll type in TD for the Toronto Dominion Bank on the TSX, and this is the one we want here, we want our RRSB account selected, and we're going to go to fractional buy. Since the one share of TD Bank is $86 Canadian and we only have $50, we can use fractional shares to buy almost one share. You could literally use $1 if you wanted to, and this is the reason why I love fractional shares. So we have $50 for this week. We'll put it in, and we'll get 0.57 shares of TD Bank, but it doesn't matter. We'll put it through, and we just bought TD Bank stock inside of our RRSB. With the new addition of TD Bank stock inside of a portfolio, here's a quick little visualization of how our stocks are looking. So once again, we're looking for that 5% allocation to start things off, and then maybe over time, once we get a better idea of how many stocks we're going to hold, we can build upon it. So 5% ATD, 5% CNR, and 5% TD. That's 3 stocks in total inside of a portfolio, and here's a portfolio pie. So once again, we're slowly getting there. We're slowly developing the portfolio, and over time, we'll be adding new stocks. But here's a quick little overview of what a portfolio looks like right now. So every time I do a weekly update on this channel, I want to focus on some aspect of dividend investing. So in the first week, we focused on dividend growth, and we talked about how dividend growth and companies increasing their dividends over time is super important. In the second week, we talked about diversification, how we're slowly basically expanding our portfolio. We're looking to add somewhere between 10 to 20 stocks from different sectors inside of a portfolio. And in this week, we're going to be focusing on total return. And total return is a combination of the dividend yield plus the stock growth over time. So one of the biggest misconceptions that people don't realize is when you look at a stock graph on Google or on a lot of other websites, we usually will only show the stock growth and won't actually show the dividend yield or the total return. You have to actually use some tools to see the total return. So what we're going to do is we're going to look at the stocks we hold and as well as TD and assess the total return of these stocks so we can see what the real value of these stocks is over time. We're not just looking at the stock growth, we're looking at the yield plus the stock growth over time. Alright guys, so here's some examples of some of the stocks we have inside of a portfolio showcasing the difference between total returns and just regular stock price returns. Once again, very important to focus this, and as stocks basically go, we take a view of the larger picture and we have a longer period of time, you're going to notice the bigger change, right? Because you have more room for those dividends to grow, more room to compound, more room to reinvest them and whatnot. So here's ATD Alimentation Couche-Tard, the first stock we bought. Now this green little line here is going to be the stock price, and this blue line is going to be the total return. So once again, total return is stock growth plus dividends, and then dividend growth and all that, everything included. It's the real return of any price, and ATD's total returns is $13,000 over time. However, the price returns for just the stock price is $12,741. So once again, those dividends compounding over time really do add up. Take a peek at CNR really quickly. We're going to take a peek at all the stocks. This one we can see it a little bit more clear. Once again on the graph, we have the green bar here is going to be CNR total price returns, and then we have CNR. The blue line is going to be the green line is going to be the total price return, so that's stock growth, and then the blue line is going to be dividends plus growth. And we're always going to see that blue line kind of basically be a little bit higher. So, if we're looking at the big picture here, we want to make sure we have the highest number, because here it's an extra 400%. Again, with these more conservative dividend growth stocks, we're going to see a little bit, not a huge difference. There's going to be a little bit of difference between total return. But when you move into a stock like TD that has a higher yield and have more dividend growth, here's where we're going to see a big difference between the two, right? We have the stock growth here kind of in the green line, and then we have the blue line, which is actually quite a bit more. TD's total returns, since I think this is 2000, I got this graph pulled up here, it's about 23 years. The total return for the price is 250%, and if we add the dividends, it's almost double. So that's actually pretty crazy, 472%. So always consider and always look at the total return when you're assessing your dividend stocks. And the last example of total return I'm going to show to you guys in my own portfolio. This is my own portfolio. I've started investing. This is my entire stock portfolio. So not just my dividend portfolio I'm starting here, guys, but my whole portfolio that I've been investing since the beginning of 2019. Here's the total return of all my stocks. So on the right side here, we have just the stock growth, and in every single case, pretty much, you're going to see that the total return is always higher when we include the dividends of all of our stocks. Every single stock we see here, you can look at them, you can compare them to, the total return is always going to be higher from the dividends being counted, them being reinvested, and those dividends growing over time. So again, here's just a hard example of inside my own portfolio how total return really, gives you such a better idea of like the total return of a stock, because we just included the stock growth. We're missing out a lot here. A lot of cases, this is a lot of growth that's not being missed if you're not looking at total return. So just to kind of close out this video, I'm going to talk very briefly about the banks. So the banks are some of the best investments that you can get in Canada, and really, when at the end of the day, like, they're all pretty good investments. You know, you can invest in any one of the banks and you're probably going to do well. Everybody kind of has their own preference, and all the banks kind of focus on different aspects of their business. So it's really up to you guys to decide, you know, what bank you want to do, or what one's going to work good for you. I personally like TD because of the fact that it has lots of international exposure. There's lots of expansion to the United States and the Canadian markets, as well as markets, you know, in Europe and Asia. So I think the company has done really well. I also am a big fan of their growth. You know, the company as a whole is growing immensely. They've had tons of growth. They have good dividend growth, as we've seen here. And, you know, when it comes to the banks, a lot of them, honestly, I honestly think they're just too big to fail. And whenever things change, whenever they experience hardships, they're always adapting. And we've seen them go over all types of different crises, things like the financial crisis, COVID, different things like that, and even high interest rates right now. And they're still doing really good. Like, they're always going to be, you know, those essential stocks that are going to do well. So I think it's a very safe investment. But at the end of the day, they also have some pretty good returns as well. So if you guys don't have a Canadian bank inside your portfolio, definitely look at adding one. Alright guys, that's it for today's video. So like usual, let me know what you guys think in the comments. If you guys are just watching this video and this is the first video you've watched this series, be sure to check out the playlist. The playlist can be found on the YouTube channel homepage. Go on the homepage, click on the playlist, and you guys can watch the previous episodes if you missed them. It's important to kind of, you know, catch up and just kind of know what's going on here. So once again, if you like this episode, check out the previous episodes. They are on YouTube. But anyways guys, take care. Hope you guys have yourself a good week. Thanks for watching the video. And if you guys like the video, be sure to give it a like and subscribe to the channel. Take care, and I'll see you guys later.